All right, thank you guys. Thank you so much for jumping on for tonight's session. A lot of you guys have been following the success of Mr. Papote. I'm going to let him tell you his story, his success, his experience. I'm just here to be his gracious host and turn the floor over him for tonight's session of Chart and Chill. He's going to give you a behind the scenes look at what he does to bring in these phenomenal results. You know him as Papote Banks. We're going to start calling him Mr. Break the Banks. So I have everybody muted out of respect because, you know, I've just learned from doing these calls for the last 3 years, people will unmute while they're in the bathroom, while the baby's crying, while they're yelling at their spouse. So we want a good, clean recording. So we'll have a good, nice replay, and also to give respect to our host for tonight so he won't get interrupted. So what we will do is we will allow him to teach. When he gets to a point to where he wants to stop and address questions, we will allow anyone who wants to ask a question to unmute and ask a question, or either you can type it in the chat. But we want to stop and give him all of our attention, all of our time. You know, when we have these 6- and 7-figure traders on here that are volunteering their time, we want to make it, you know, as respectful as possible. So with that being said, Papote, come bring it home for me, man. I'm going to let you take over the call from here.
Yeah, I'm here. Y'all hear me? Do y'all hear me?
Yes, sir.
You hear me? Okay, great. Here we go. I'm here. I'm a live person, so you can see. All right. But I'm just gonna get right back. I'm stop my video, and I'm just gonna speak and tell you a little bit about myself and why I'm getting these results, and we're gonna jump right into it. I'm not gonna hold you up. I respect everybody's time, you know. So let's get to it. Okay, I come from Hunts Point in the Bronx. Um, I come from a family of four. My mother had four of us, and basically, I lived okay life. Let's put it like that. Just put it like this. I come from nothing, you know, and I've tried so many things in life, you know, and it didn't work out for me at times. You know, I hit a high and I came back to a low, you know. So jumping into this Forex thing about a year ago, it changed my life or like tremendously, you know. It gave me back my time with my family and all. And basically I'm blessed and yeah, blessed to be in here. You know, I've been doing this for a year. You know, I've cleared over half a mil. Let's put it like that, within a year. So, with that being said, we're gonna jump into this because I don't want to hold y'all up. So I'm gonna start sharing. Okay, here we go. Screen. Here we go. Microphone. Oh, okay. Okay, here we go. Bear with me. Uh, I never did this before.
I think if you hit that little minus button where it says chase pips, it'll like put me down in the corner.
Okay.
Nobody puts baby in the corner.
All right. So how do I go to the slides? My slides from here. Can I just swipe up out of the
just swipe it up and open it. Yes.
Okay. Great. So now we're gonna go to my slides. Okay. And we're gonna get right into it. Okay, family. We're gonna get right into it. So, is this it? Yeah. So the table of contents. What is the 930 trading setup? Everybody can see my screen.
Yes, sir.
Okay, great. So that's number one. And then we're gonna go to how to trade with the 930 EMA strategy. When to use the 930 EMA trading strategy, 9 and 30 EMA strategy, trading strategy, advanced concepts, and then final words of the strategy. Okay, moving right along. Learn what learn learn what is the 930 trading strategy that successful traders want to hide it from you. Through the trading guide, we're going to share the 930 trading setup with which is based on simple moving average trading simple moving average trading strategy. Additionally, the 9 and 30 EMA trading strategy will teach you how to trade pullbacks and ride the trend. Unlike the EMA crossover, which is more used for universal trading signals, the 930 trading strategy is used to ride the trend. And as the saying goes, the trend is your friend. The moving average indicator is probably one of the most popular trend indicators out there. Traders and investors usually pay attention to key moving averages 9 MA, 20 MA, 30 MA, 50 MA, 100 MA, and 200 MA. Most popular shows on Bloomberg TV and CNBC will often make reference when the stock prices or major stock indices get near these moving averages. Moving on, we're going to share with you how to improve the game when you're using moving trading strategy. Let's first start by defining what is the 930 strategy and then learn to use the 930 strategy setup along with some advanced trading concepts. So I'm gonna zoom in a little bit on here because I had to split the page. So if y'all can see what I see right now on your right hand side, let me know, Gigi, please. I'm in my left hand side.
Okay, yes.
You see my left for right now. Okay, great. So originally the 930 trading setup was developed by Mike Burns and involves using a combination of two moving averages, 9-period exponentials moving average EMA, 30-period and 30-period weighted moving average. Okay, so now if you look at the chart, all right, the nine right here. Okay, let me see if I can use my pencil. Okay. Okay, here we go. Thank you. Here goes my. So right here, if you look at it, I can use my pencil. So here, I can use my pencil. What's this for? Okay, if you look at this chart, we're looking at US the US the euro against the US dollar in a 5-minute trend. I mean a 5-minute chart. All right. So in this case, the 9 EMA is our short-term moving average, while the 30 EMA is our long-term moving average. The 9 and 30 EMA trading strategy seeks to take advantage of. Oh, that's what I'm doing. Of
your pen said you didn't have a color selected.
Between the two moving averages. So if you look at this chart, you put the cross right here on the top, right? The nine. Once you've seen the 9 cross, your 30 cross your 9, and then your 9 continues going down. The more gap you have in between these two, the better it's going. You understand? So the more gap you see, it's a lot. It's respecting the trend. It's respecting the trend. So usually you don't want to trade this on basically on a sideways market. You don't want that. You want to see the cross and you want to see it confirmed. So I always wait till my third candle after the crossover. Boom. And then that confirms to me that, okay, and then I look at the gap. If the gap is beautiful, how is you looking at it here? Basically, that's going on downtrend. So you would have caught it on the right there, it entered right here. It kept going down, as you can see. So moving right along. Now learn how to trade the EMA strategy. I'm gonna say it like that. Okay.
The filter for the 930 setup can be summarized into a 3-step process. These are the rules for a long trade signal, meaning, okay, so we're looking at the euro again. And you see the gap, once again, like I said, we would have caught the cross right here, right when the yellow was crossing when the blue is crossing the yellow, and the yellow came down and made the gap, boom. That would have been a nice sell-off, and it continued, and it still continued going down. The filter for the 930 trading setup can be summarized in 3 steps. These are the rules. So I'm hoping y'all following along. I'm not looking at the chat, so if somebody could take care of that for me.
I got you.
Because I can't see it. I'm hoping y'all moving along. If y'all moving along with me, put a one. Let's confirm we're moving along. Are we moving along? Okay, I guess we're moving along. Okay.
Yes,
so,
everybody was dropping ones in the chat. They're muted right now because you're
yeah,
recording.
I know. That's why I'm saying I was waiting for your confirmation. I know. All right. So now, if you want to short, then you follow these 3 step process. 9-period EMA must be below the 30 periods WMA. The 2 moving averages need to be apart from each other. And then the first bar that closes above the 9 EMA will be used, okay, will be used as the trigger bar for the sell seller. Place a sell limit order below the low, below the low of the trigger bar. Me personally, I don't put a sell limit. I don't use sell limits. You understand? I rather market execution on all my trades. So I mean, each his own, but I've been using this strategy without doing that, and it's been working. So for a short trade, the example is below. Okay, I'm gonna zoom in. So now we're looking at a 15-minute chart with British and USD. Okay, the British pound, BP. Sorry about that, and the US dollar. So now, number 1, the EMA. If you look at the chart, your blue line, which is your 9, is below. Number 1, trading below 30 EMA. Then number 2, the candle above closing above 9 EMA. And then 3, the break of the candle low. Like with many trading strategy, you can always use different flavors to get into a trade. So you can use your chart patterns to fine tune your entry. Moving on, in order for the strategy to be completed, we need to also define how to manage trading risk. In other words, we need to define a place to hire protective stop loss and an exit strategy. Okay, moving on. Let's see what type of trading environment is best suitable with the 930 moving average trading strategy. See below. The 930 trading method is a type of trend following strategy that seeks to enter the trade on pullbacks. And in this regard, the best time to use the 930 strategy is when we have established a trend. The trend can be defined via the two moving averages as follows. The bullish trend is defined when the 9 is above the 30. And the bearish trend is defined when the 9 EMA is below the 30. The strength of the trend can also be measured via the space between the two moving averages and the angle of the moving averages. The bigger the gap between the 9 EMA and 30 EMA, WMA, and the steeper the angle of the two. So basically, like I was saying, if we look at this again, all right, and you could basically, if we're looking at UJ now, all right. When we first saw the blue cross right here, you understand? You see the cross, boom, 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 and then the gap started. So now you start. If you look at the yellow, that's your 9. So it went down. It kept that going down. Boom, 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 boom. You understand? So basically, like I said, the more gap you see, the better the trend is gonna follow. So when you see the sideways right there, where it's just a little boom, 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 and a little boom, that's a trend you don't want to trade with this strategy. That's because it's gonna have you on your toes. Believe you me. Wait for this confirmation. Wait for the gap. That's why I always wait for like the third, after the third candle after the cross to confirm and look at the gap. So we're gonna go over here now. What do we mean by this? Instead of using a bar that closes above below the 9 period EMA, we can wait for the entire bar to be encompassed between the 9 EMA and the 30 WMA. However, the downside of this trading approach is that you will get fewer trading setups. See the Forex chart below. So now I'm gonna zoom in. Entire candle between the two EMAs. So you see, as well, if you look at this, you want to look at that as well, because that would have been a nice entry for another entry for a buy. If you would, because you look at the cross over here, when the 9 crossed if you look at your left, when the 9 crossed, it went up a little bit, boom, and it came back down, you know what I mean, and retest, boom, and then look, that whole candle, if you look at it, was in there. That's gonna indicate an explosive trade. You understand? You see how it followed? It followed along, right along. Oftentimes, this type of trading, okay, oftentimes this type of trading setup can lead to explosive trades that never look back. While other ways to use the 930 setup. As we explained earlier, the edge of this pattern relies on the resumption of the trend. So what's the simplest way to measure the trend direction? A series of higher high followed by a series of higher lows defines an uptrend. And reverse, a series of lower highs followed by a series of lower lows define a downtrend. It's plain and simple. I mean, it's an easy strategy to follow, you know, if you follow it. And basically, I'm gonna show you. I'm gonna get to the other part of what I added to it, for you could see why I added to it and how the two goes in by. So they just get to the bottom of this one for right now. Okay, here we go. So here's an example on the daily chart below. All right. So based on if you look at this chart, based on the 930 strategy, we need to wait for the daily candle low to be tagged to trigger an entry. However, with the new advanced concept, we can enter the market early and catch up more pips. You understand? So you want to start with a daily. See where the daily candle's at. You understand? And if it closes the EMA, if it closes above the 9 EMA, you understand? You could have shorted it but let's move along. When we downgrade to the 5-minute chart, we can notice a pattern of lower highs and lower lows, signaling the start of a downtrend. See the 5-minute chart below. Keep in mind, in the chart setup found on the daily time frame, we can make a trade on the 5-minute chart when price breaks and forms a new lower low. When the price makes a new lower low, after at least 2 lower highs, it develops a price structure of a downtrend. This makes an excellent entry method for the 930 strategy. I hope you are moving along with me. If you look at the chart, like again, you see, boom, lower high. When we went down to the lower time frame, you see lower high, lower lows, boom. And you would have got in here, short here. It would have been a nice sell-off right there on the chart. Okay. All right, final words. In the summary of the 930 trading setup, is a very effective trading strategy to be used across all markets and time frames. Keep in mind that the power of the 930 trading strategy comes from having a prior upwards or downwards trend. Traders should use this method as a pullback trading strategy rather than to find reversals. The key takeaways from the 9 and 30 strategy can be summarized below. You have the momentum power of the prevailing trend on your side. You only need to focus on the gap between the two moving averages. Often offers you effective ways to manage your risk, building trailing stock. That basically sums up that part of the strategy. If you want to open up the people, unmute people if anybody has any questions for right now.
So everybody's able to unmute themselves. So if anybody has a question for Mr. Papote, you can unmute yourself and ask it this time.
Yeah, Papote, man, I think you really, this is Arian, by the way. I think what you have here is addressing the problem that I'm facing with like the GR 30 is that like I get in too soon and it pulls away instead of like using something like this where I can make sure that like if it reverses that like say for the sell, I'm at the highest point and I'm getting in and it's gonna go down. I need another confirmation. So this is kind of reboosting my confidence going back in. Like I think that's great advice. Wait for the third candle and for that gap. And then depending on whether if it's the sell or the buy, depending on what line, then go in. Because the position, I've been having a problem with that. So I really appreciate you taking the time out, showing us this.
Hey, Papote, do you want to share TradingView and show the newer people how to add it, or I can do it for you?
I got a quick question real quick.
I'm sorry, you broke up just a little bit.
I said, this King Visions. I got a quick question right quick. I had wanted to ask him, hey, Papote, what time frame do you use this on the most? Like, which one do you actually see that it follows the actual, like the pattern it's supposed to?
You're muted, Papote. Hey, Papote, for some reason you're muted and they can't hear you.
Unmute. Sorry about that. I'm back. Me personally, I start at the 4-hour chart. You understand? I start at the 4-hour chart to see where how the trend is like if we on a bullish trend or or bearish trend, basically. And I look for my key points of interest with the 4 hour. And from there, I will break down to the 1 hour and see if I can confirm, to see if it's still confirming what I saw in the 4 hour. Because whatever you trade in the 4 hour is going to happen in the 5 minute. It's just a matter of when you're going to catch it. You understand? When you catch it. You understand? Whatever happens in the 4 hour chart is going to happen in the 5 minute chart. Believe it or not. So, but I start with 4 hour to further confirm the trend, how strong the trend is. And I break it down from 4 to 1 to 30 to 15 to the 5 minute. 5 minute, I look at it. I start looking for my entries in the 5 minute. That's basically how I trade it.
Okay, appreciate that.
Okay, great. If anybody else has any questions, now's the time, because I'm gonna move right along. All right, and I'm just gonna I'm with the 50 and the 200 EMA. I'm just gonna do it with straight from my trading view. All right. So if anybody else has any questions, now is the time. If not, Miss Gigi, you could mute everybody once again.
Yeah, I have a quick question.
Okay.
First of all, thank you for taking the time out, to drop these nuggets on us. Really appreciate it. My question is, when you were on your journey last year to the road of $500,000, what was your initial capital that you started out with? And
I started with $300 capital.
$300. Wow.
Yes. I was blessed to change that $300 to $10,000 in 1 month.
Wow. And what was your risk percentage?
I always risk 1%. I never risk no more than that. 1%, wow. 1%. It will get you far. I used to do. When I started, I was doing 1 to 3, but then I and I just said, you know what, I'm just gonna stick to the 1, because I got burned sometimes with the 3%, and the market humbled me a couple of times. We can't always be right. So, but yeah. It's all about discipline, and it's all about I'm like this. I try to take at least only 5 trades a day, and if my first 2 don't go my way, I don't trade no more that day. That's my discipline. I stay off the charts.
Gotcha.
Now, I'm here to tell you, this is not a fluke. He has shown his withdrawals. He's doing what he says he's doing. So don't think he's out here just blowing smoke.
I mean, like I said, people lie, numbers never lie, and people seen the numbers, you hadn't seen my testimonies all over the chats. But moving right along, I'm gonna start sharing my trading view for we can see.
May I ask a quick question, please?
Yes.
Are there specific pairs that you find that this works best with, or specific times of the days to trade that you find this works best?
If you haven't noticed, I usually trade London into New York session. Those are my times I mainly trade it. Why? It has more movement for me. I don't like sideways market. I feel the market has more movement when London opens up and it crosses over with New York. That's just my personal opinion. Someone probably would think different, but that's just my experience. I made more money trading those hours. Sometimes it's hard because people have to adjust their sleeping schedule, but I try to be out the market by, I want to say, by 1, 2 o'clock latest, and sometimes don't happen. I stay in, but yeah, those are my times of trading. You could use it with any pair. It doesn't really, it's gonna work the same way, But keep in mind, the 30 is a weight, the WMA is a weight moving averages, not a EMA. So it's you got your 9 EMA and you got your 30 WMA. So keep that in mind.
Thank you.
Okay. So again, hello, anybody? Okay. I'm moving right along. I'm gonna go into my trading view for you can see how you could use it, how you can add it, and then we're gonna jump right into the 50 and the 200 EMA. Okay, we go moving right along. I'm going to my trading view now. Okay. So I started with a clean chart because Miss Gigi loves clean charts, you know, all due respect to her. But here we looking at US 30 right now, right? So now how to add this, you want to go to FX, your indicators, boom, boom. You could type in you want to say EMA, right? EMA, and you're gonna see the top one, moving average exponential. That one, boom. Do you want that one? Boom, and you're gonna close it, and right. So I'm gonna show you. All right, I'm gonna show you this. I'm gonna show it to you. It's just so now I just added the 9 to the chart, which it would be your my green line, and how you do this, when you press the EMA, you understand, just gonna ask you for the length. You want the length to be a 9, the number 9, the style, visibility, style, you understand? You want an EMA, you're gonna see the box, it's not gonna be checked, you know what I mean? Oh, I just hit it again, sorry about that. And that's that. So now the 9 EMA is gonna follow the trend at best. It's gonna stay closest to the trend at best. If you look at my chart, you can see. You understand? So then you go and you wanna look for, you hit the FX again, boom. Hit the FX again, boom, and you wanna look for WEMA. So we're gonna put W. Hold on. Shit, hold on. And the WMA. You're gonna see it, moving average weighted. That's what you want. So we're gonna add you. I already have it added, so I'm gonna hide it. That if y'all can see my screen clear, please give me a confirmation. Somebody.
Yes, sir.
Okay, great. So now, here we go. Let's look at this chart. Let's look at US 30 right now. All right. We're gonna look at US 30. It's with the 9 and 30, right? Here we go. So now I'm looking for a good setup, this is a 1 hour. Let's go to the 4 hour. Let's go to the 4 hour real quick. Let me see something now. We got the 4 hour, here we go. So as you can see, US 30 right now is on a sideways trend for me in the 4 hour. I look at it as sideways, the gap in between them ain't big, you understand? So when it's like this, I don't get into trades like with this strategy. I won't get into until I see a gap in between the 9 and 30. They just say right here, they just say boom, if we look at here, hold on, let me log, boom. I want to look for, hold on. I want to look, all right. Let's use this one for example. All right. We on a 4 hour. So now, if we were to quote this, let me use my pencil. Okay, now, here we go. If we were to quote this right here, right? Like you see the cross right here. Okay, so now we see that the 9 EMA is about to cross, is in a bullish, it has a nice curve on it, and it's about to cross the 30 EMA, which is my yellow EMA. If you look at that, boom, if you look at that set, boom, and you would have caught it, it would have been, this is how you ride the wave. You understand? This is when you hear me ride the wave, this is when I say ride the wave in the chart, this is what I'm meaning. I'm riding the wave. Because you see, it stood your 9 stood on top of your 30 EMA. And it just stood up there. So if we would have caught it right down here, the cross, we'd have been in all profit until we got here. So now we see another cross. So now what you do? You see how the cross is? You see the gap? You see the gap? How so you know it was on a downtrend. You understand? And this is the 4 hour, but I'm gonna show you. How do I delete this one? Delete. Can't delete it. All right. Okay. Trading view. You wanna play with me? Oh damn! What did I just do? Sorry about that. You wanna play with me, trading view? Okay. So now you wanna this is basically how I use this strategy. Basically, I'm sorry about that. Let me take the brush off. So yeah, basically right here, this is another confirmation right here. Hold on, let me open it up. You know, we're gonna open it up, right? There's another confirmation right here. Look at the confirmation. Look, it's beautiful. You understand? Look at the cross right here. This would have been a nice setup. You understand? This would have been a nice setup right here. The cross, right? Okay, the cross right there, boom. But I would have waited. Until I seen until I see the gap, and the gap is there, it's a nice gap. This is a 4 hour chart, like I'm saying. So it's a nice trend for the 4 hour. You understand? It followed it. This is every candle is 4 hours. So we're looking at. You understand? So it'd have been a nice trend right there. Nice trend. We would have followed that trend. We could have kept going with the same trend. You know what I mean? And held it. So now let's go to, I break it down to the 1 hour. Let's go to the 1 hour now. All right. Hold on. Sorry about that. Let's go to the 1 hour. Here we go. The 1 hour. The gap, once again, if you look at it, look at the gap right here. That'll be a nice sell-off right there. You understand? And it's all about the gap. It's all about the gap with this strategy. It's all about the gap. Let's see again now. Let me open this up like this. Let's look at this now. So yeah, gap. So now when you want to get out the trend, you know what I mean? When do you get out is the question now. When do you get out the trend? I think that's a good question. I'm gonna explain to you when you want to get out the trend. You see the cross here. Boom. You got a nice gap, right? And still bullish. We still bearish. Boom. That'd have been nice pip. That was been a nice pip catch right there. Boom. And then now we're gonna see the cross again. but we bullish now. We bullish, and look at the gap. You understand? We look at the gap, and look, it's right in the trend. If you look at it, it's right in the trend. It's right in the trend. It's right in the trend. Right? So you ride it until you see another reversal, which is another cross. That's basically what you want to do. This is when you know when to get out. When you know what I mean? This is how I set up my take profits. This is how I set up my stop loss. You understand? Based on this strategy. You understand? So I hope we are moving along with me. So now, what did I add to this strategy for further confirmation? I added the 50 EMA, which is my blue. I just added it to my chart, right? And I added, oops, sorry about that. And I added my 200 EMA. So now, why I added this, it gives me further confirmation in the trend. So now I'm gonna show you how this all four plays along, okay? Look at this sell-off right here. I'm gonna show you. So now, yeah, my purple is my well, the pinkish one is the 200 EMA and the blue is the 50 EMA. So what happened here, right? You see right here that the 9 EMA first crosses the 30, and then it crossed the 50, and then it crossed the 200 EMA and stood below the 200 EMA. That right there, another good sell-off. It would have been this would have been nice pips right here. You understand? This is why I added the 50 and the 200, because it gives me further confirmation of the trend. The 200 gives me further confirmation. So you wait. If you look at it, boom, boom. If you would have caught it here in the first cross, that would have been great. If not, this would have been your second opportunity to catch this trend right here. When the order block was there. That's a nice order block right there. That would have been nice. And look how all EMAs is spread out. And your 200 is above your 50, your 50 is above your 30, and your 9 is above below your 30. So basically, this is beautiful. That would have been a nice, beautiful. And then now we look at let's see a buy setup. You understand? We look at a buy setup now. They just say, right? I'm gonna take the brush off. They just say right here. We're gonna look at it right here. Boom. The buy setup. Boom. Here goes the cross right here. Here goes the cross. We got an order block right here. I'm gonna show you. We got an order block right there, right? And look at the cross. Look at your green EMA cross your 30. Then it crossed your 50. Then it crossed the 50. And it kept riding above your 9 is above your 30 now, and above your 50. And it kept riding, and it crossed your 200, was the purple, and it kept riding, and it stood above. It stood above. If you look at it, it stood above. We're gonna follow it. Watch what happened. That would have been a nice explosive buy right there. It sold boom, and look what happened. Now the trend stood, look, on top of the 200, so you get a little whipsaws to sideways, but this is the entries you want to look for with this strategy. You want to see the cross and the confirmation. You don't want to just think, okay, it's a little cross. You know what I mean? You want to look at it, how it crossed and the gap in between the cross. And then your 50 and your 200 EMA is further confirmation for your 9 and 30 strategy. That's basically all I did to it. But these are all EMAs, not MAs. These are all EMAs. So another example, Let's look for another sample. Well, another sample. Let's see. Right here. This would have been a nice one. Okay. Here we go. Another sample right here. Another sample for a buy. Okay. We got right here. Again, you got your 9 EMA crossing up on your 30 EMA, and it just kept going. Look, 1, 2, 3. This is why I say I always wait for the third candle, no matter what time frame I'm in. Okay, 1 is when it started to cross. 2, 3, the cross happened. It stood above it, and it kept going. It kept doing what it had to do. It kept going, and further confirmation, it crossed. Now you crossed the 50, and your 9 is still above your 30, right? And basically, if you would have caught that we would have caught that down here. Look what happened. Look what happened. It just kept going. It kept going. Oh, it stood on top until this cross right here. Here goes the sell-off. And they all entwine with each other. But your 9 year 30 is the ones you mainly want to pay attention to, and with this trade, with this strategy, and the gap in between them. So again, this would have been a nice sell-off right here. We got a bearish candle right here, and then we got 1, 2, 3. Boom. Look at the gap in between them. It confirmed it. It crossed your 200. It crossed down your 50. Boom. So that would have been a nice downtrend again. Then, as you can see, the 200 is on top of every other EMA. You know what I mean? For the sell-off. This is to further confirm. This is why I added the 50 and the 200 to this strategy. Basically, that's all I have for right now. If anybody has any questions, Khadija, can you unmute them, please?
I'm sorry, when I unmuted them, it muted you back. But if anybody has any questions for Papote?
Papote, my question is, how do you trail your stop loss? Like, do you, because I know a lot of people that have been talking about trailing it, it's like they get zapped out because it retrace. Like, how, after every TP or gain or partials, like, how do you position your stop loss while you follow the EMAs and the WNA and the WMA?
Unmute Papote. I'm sorry, it muted you when I unmuted everybody else.
Okay. All right. So basically, I started how I start my stop loss. I try not to be more than 50 points as a stop loss, especially with indices. I mainly trade indices, if y'all haven't noticed, but I try not to go over 50 points, which is 500 pips if you know in an index. That's just me personally. You understand? It's been working for me, you know. And once it hits my TP1, I'm moving my stop loss to break even. This is how I trail my stop loss. That's my first, and I'm cutting my lots if that lot size allows me. I'm cutting my lots in half. I'm taking 50% of my profit off top. So if the market decides to reverse on me, I already ate off that. You understand? I took my money off top. You understand? And I don't lose no money. Now, if the market keeps going my way and it hits my TP2, now I'm moving my stop loss to my TP1. And I just keep trailing it just like that until I see a reversal in the trend, like with the indicators. That's basically how I trail my stop loss and secure partials and each TP. So they just say we take a Titan. They just say you take a Titan or you take one of my trades ideas, right? And when I say TP1 smash, secure partials, my first cut is 50% of my lot. So if I start with a standard lot, they just say 1.00, which is $10 a lot. Each lot, basically, I cut it to a $5 lot in half once it hits my TP1. And once it hits my TP1, I move my stop loss to break even. So now I'm taking 50% of the profit out of the market, just in case the market does want to reverse on me. And I won't lose nothing. I try not to move my stop loss too quick because yes, that happens. The market will retest and hit where you where you started at, and then go the way exactly where it wanted to go, that you said it was gonna go. So it all depends on the price action and the movement of the market and the price and structure and market structure, and basically on basically the trend and my EMAs, what my EMAs is telling me. You understand? So that's basically how I trail my stop loss.
Well, I think that's great, man, because I know doing this, I'm at least guaranteed to get 10 to 15, 10, 15, 20 pips, because it's like,
you're gonna, I mean, with this strategy, and you stick to 1%, you'd be good. You'd be good with it, because if once again, look, we're in the 5 minute. Now this is how I look for my entry. If you look at my screen, right? Oh, hold on. I think I gotta unmute myself. Okay, if you look at my screen right now we're in a 5 minute. This is how I look for my entries. Okay, my sniper entries. So we looked at US 30, right? We seen where it was at in that 1 hour. But look at this is where you want to look for entries at. This is how I use my entries. Now, if you look at this chart right here, look at this. What do you see there? What do you see there?
I see the 200 on top.
You see how they fanned out? You see how they
coming
fanned
down.
out? Do you see how they fanned out? You see a 200 EMA?
The wide gap.
The wide gap, you see it? So if you were to call, you see, you don't want to trade this in the sideways market. Once again, like I said, you want to see these crosses happen. You don't want to guess that the cross is going to happen. You want this cross to happen. And if you look at it, it's in the 5 minute. If you would have caught the cross from when it first crossed your 50, boom, and boom, 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 and then it stood gapped out, you know we're in a downtrend right now. This is basically how you use the strategy. You don't have to chase the market. The market's gonna tell you what's gonna do. That's why patience is key to this type of trading strategy. Patience is key. You know, the market will tell you their story. Trust me. And look, if you would have caught that, look, that's nice. That's some nice. Look, let me put how much pips that would have been. Look, we're gonna look at it. How many pips that would have been? Check this out. We're gonna measure this. Hold on. Hold on. Where is it? How do I measure this? What's going on here?
It's hard to find on an iPad.
Yeah, I'm looking at it. Oh no, here we go. I know
There it
where
is.
it's at. No, here we go. I got it. Here we go. Look, we would have caught at the cross, right? They just say the cross, right? Hold on. We caught at the cross, right? Look at this. I'm gonna cut out the cross. Hold on, risk to reward. Let me see, let me go here. We're gonna move this up a little bit to the cross. Move at the cross right here. Okay, fine. So now we would have cut out the cross, right? Now we would have put our stop. You want to put your stop loss a little bit buffered up above the last high. You understand? So they just say we're gonna use this one for example, right? Right. That would have been 754 pips. Right there. That one move on US 30. See how powerful this strategy is? If you wait
Y'all look at that. Look at his risk to reward, guys.
Yes,
He made
risk to
6 times
reward.
more.
Exactly. 1 to 6. With this, with that one, and it's still in your favor. It's still in your favor. You understand? Still in your favor. So all you got, once again, you ride the wave, you ride the trend. It's still, you see how gapped out US 30 is right now? It's still gapped out. This is what you want to, this is what you want to look for. You want to look for these crosses. You understand? You want to look at them and confirm them. Don't guess them, because look right here. This is a type of market in a 5-minute chart when you're looking for entries that you don't want to get into. I'm gonna show you this. Hold on. If you didn't get into it on the trend, don't get into it, because look, the sideways stuff. Don't get into a sideways market, never. With any strategy, I don't trade sideways market. I wait for a trend to happen. You understand? And this is basically how I'm using this, and it's getting me where I'm at now. You understand? Mm-hmm.
If you look at the gap, won't you consider that red, the red candle that's right in between 9 and the 30, the second entry?
Yes, that could be another second entry for you, but I'm gonna give you a little bit sauce with this one that I added, that I use as well. Okay, this is a little extra sauce. I don't want to confuse y'all too much, because I know this is a lot of information in a short period of time that we going on. But I'm gonna show you basically what else I've been using to confirm this and look for better entries as well with TradingView. Okay, so we're gonna go here and we're gonna go, where is it? Hold on, give me 1 second. You're gonna go to, wait a minute, it should be here. Hold on. I did take it off. Sure, I took it off. Hold on. So now, RSI. I use RSI as well. All right. I use my RSI. This is, oh no, forget about that. I already got what I wanted. Here we go. RSI. Okay. Your RSI. The green line, if you look at it, the green line is 50, is the middle, basically the middle, 50, I say. It's the 50 point, right? Which it will be your 50 EMA, all right? Your 50 EMA acts like a magnet. Price usually likes to retest that area, drop or go up, retest, you know what I mean? I call it my magnet. So basically my green line right here, if you look at my RSI, I have it in between 80 and 20, all right? This is my levels, 80 and 20. 80 is for sell. That's basically, if once it gets into that area, I say it's overbought and it's due for a reversal. This is how I use the RSI as well with this strategy. Because if you look at the cross, again, where we would have got in right there. if you look at the cross, boom, look where the RSI is at. Look where the RSI is at. Look. What happened there? It went below the 50 mark, which is the green line, which is your 50 right there. Boom. And it kept going down. It kept going down. See what happened? And then it hit your 20. Look what happens when it hits the 20. Look what happens when it hits the 20. Price bounced off it again. Price usually likes to stay in between the RSI 80 and 20 periods. If y'all get what I'm trying to say. If you look at it, if we could go back, you know what I mean, for we could further confirm it. Look, look, I'm gonna show you. It likes to play in around that 50 a lot. All right, and look, the RSI goes right with the chart. It went, look, if you look at it, look at it right here. You know what I mean? So this is another thing, another tool you can add to your chart. Simple to follow. You understand? Basically follows the price and price action. You understand? So, and then this is another one for further confirmation. It's called Cipher, Market Cipher, right? But you can use this strategy without this. I use it personally. I like further confirmation. You understand? I like to see everything fall in play. You understand? So I use it. You don't have to use it. I'm just showing you what I've been using, and it's been working. So, all right, Market Cipher. I'm gonna explain to you how this works, Market Cipher. Okay, the red dot, right? And this yellow wave, that's the middle of the indicator, all right? That's the middle. Yeah, that's basically your yellow line. This is gonna be your 30. That yellow in the market cipher in the bottom, that's gonna act as your 30 EMA, your yellow EMA. So what happened? You see the red dot right here. See a red dot right there. Right? So what happened? Look what happened when the red dot happened. Boom, that's when the cross happened. You understand? It hit there, and if you look at the white line, that's basically how the trend is going. Boom, it broke it, and it went below, and now your blue, the blue is gonna follow the trend, where the trend is at. You understand? Your blue is the volume of the trend. You see the cross? Boom. Now you're 30. You know what I mean? The yellow is below instead on top. You understand? And this is how you're gonna confirm. And your blue, the trend, basically this right here, right? You see it. You see how the volume went under 0, so you know it's further confirmed for the sell trend. Are y'all following me?
Yes.
Okay.
Absolutely.
Okay.
That indicator called on the bottom.
Huh?
What's that indicator called on the bottom?
Okay, that's called Market Cipher.
Oh, Market Cipher. Okay. Okay.
Yeah.
Thank you.
All right. So now look how you know what I mean? And it's gonna tell you basically, look, now we got a green. Hold on. We got a green. Oh, I can't remember. Okay, we got a green. Look, we got a green dot right here, right? Which would be indicating it's gonna go on a buy. But I look at it, and you look at the blue. If the volume is still below the 0, you understand? It's still below 0 on the. So I will wait for further confirmation. You understand? Until this blue is not on top of that 0. All right, on top of the yellow, like that, like this. I wouldn't consider it as a buy, as a buy. I'll stick with myself. That's how this basically how this indicator works. It follows momentum, volume, and trend all in one. And like I said, if you look at the RSI, it confirms. Look, it broke there. It was below it stood below the 50, and look what happened. Look what happened. Everything confirms. Look what happened. Look what happened. Right here, we got the first indication that we was gonna go bearish right there. That's the first. So now you wait. You see the white line? You wait. Now your volume changed to the bottom. Look what happened. And it all entwines in one. You see how everything follows, everything follows. This is what you want to look for. This is what you want to confirm before just getting into a trade. And this is what I've been using. But once again, you see, you got a green dot. But look what happened. Look what's happening. Okay? We still on a bearish trend. Look at the gap. The gap is still big. So does it make sense to y'all following me? Like, do y'all see how this all comes entwined together and why I've had this success so far?
Yes.
Amazing.
Definitely.
Are you using
Yes,
a standard setting on RSI?
RSI, no, I use default settings for RSI. The only thing I give the RSI is levels, which is 80, 50, and 20. Price likes to play within those areas. When price hits 8, and I'm trying to see if you can see it. When price hits 80, I'm gonna look for it where it hit 80, right? Look what happens, okay? Look what happens. When price hits 80 right here, look what happened here when it hit 80, right? On the RSI. Look what happened. Price got close to 80, right? What happened? It started selling off. Right? Start selling off. So boom. But I will wait once again. I will wait until I see this stays below the 50 mark of my RSI. Because if not, it's just a sideways trend for me. And I don't trade sideways trend, because if you look at it, look, it just went sideways and went sideways and went sideways. It was just going sideways. So if you didn't catch that initial entry, right, which was up there, I wouldn't get into it. You understand? If I didn't catch that initial entry, I wouldn't get into it. So then here we go again. Let me see. Let's move this over here. I'm trying to find an explosive one for y'all can see how strong this is. Damn. Now the US 30 has been moving sideways for too long now. But now, look, example, right? Look at example right here. Hold on. We're gonna move this here. Look what happened here, okay? Look when it hit once again, when it hit 80, right here. Look what happened. When it hit 80, right there, right? That's your RSI, hit 80. Boom, that's one confirmation that's overbought, right? It's another confirmation that's overbought. Your red dot in the market cipher. And look what happened. If we'd have caught that, boom, 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 it would have been a nice little sell-off. Until, look what happened. It went, if we came back, it boom, and then look what happened. It broke the 50 on the uptrend. So this was where I would have got out at. Right here. You see you see it? And then if you look at the cross, look, you got a cross right here. It all entwines with each other. So I caught it here. Boom. If I would have caught it there or I would have caught it here, this would have been a second entry with the RSI. Boom. And I would have got out there. There was some little pips there, you know what I mean? But basically, this is how I've been using this trend. I mean, this strategy. You understand? Like I said, you don't have to use the market cipher to understand the strategy. I do advise to use your RSI with this strategy because it's gonna give you further confirmation. If anybody else, if that's about it, if nobody else has any other questions, sorry to say, baby girl just woke up, so I'm gonna have to attend to her.
Thank you for
I'll
the
take a
fire
few.
strategy.
All right, I will take a few more questions. Before I go, I just hope that I followed me. I mean, how I've been using this. You understand how I've been using this strategy, because it's been working. And like I said, look, another confirmation right here. Market was going sideways. Look, if I could show you another way, look, 1, 2, 3. Look what happened. Look right here. 1, 2, 3. Look what happened on the cross. It stood, you see how the 9 stood in above the 30? It stood above, it stood above your 50. It stood above your 200. Now you ride the wave. Look what happened. Look at the gaps. So you could ride this wave. Like I said, this is why I say when I say ride the wave, you could ride this wave, right? And trail your stop loss. Look, if we would have been riding, look, it's still up. Look what happened here. Look, boom, still riding. We still riding. Now what happened? Now when, boom, you got a cross. You understand? You got another cross.
Okay.
Yeah.
Do you use your 9:30 alerts?
What do you mean my 9:30 alerts? No, like I said, when I take my trades, I take a market execution. All my trades are market execution.
Okay.
You understand? All my trades is market execution. That means that I'm looking at the chart before I get into the trade. You understand? I'm seeing what price is doing. I'm seeing what trend I'm in. If I'm on the sideways market, or do I have a trend form?
Okay.
You understand?
Okay.
This is what I'm looking for. This is why I always do market execution. I don't like to put in a guess. That's basically I say. I mean, a lot of people trade like that. Sell limits, sell buy stops. You know what I mean? And they're successful doing it. Me personally, I don't like it. You understand? I don't like it. I like to see what the market's doing. I like to see the price. I don't like to be, I'll probably go to sleep and then they activate and it goes sour. No, I'd rather be looking at the market before I get into the trade. So I set alerts for my TPs on my trading view. You understand? That's what I set alerts for. So every TP I set an alert for. You understand? And it lets me know. And I set an alert for my stop loss as well on my trading view. So, because technically I learned to trade from my phone in the beginning, and I got so used to it. And then I got to my iPad, I got used to that. Me personally, I do have a computer. I do trade sometimes on my computer, but I personally trade off my phone because it's always in my hand. You understand? It's always in my hand. So I have my trading view on my phone as well, or my iPad. It's just more convenient for me that I learned how to, you know what I mean? I learned this way before I learned the computer. You understand? Be honest with you, I just started using TradingView like 3 months ago. So I'm still learning it, but it's been helping me a lot. I'm still learning TradingView, helps me a lot. But telling you, we'd have caught this trade right here, man. This would have been a nice sell-off. Nice. Cause look, it's still going. Look, still going. Look at the wave. Ride the wave. Still going down.
Man, it's powerful, man. I mean, I'm gonna call this the spread and 3 slices of bread. Like,
It's like,
yo,
I mean, it's gonna your EMAs and the trend is your friend, man. Once you learn how your EMAs move, they could become your best friend. You understand? Do I chart up? Yes, I do. I like
the big problem that you solving for me, which I keep running it because it's like I win and I lose. I win. It's like that. This knocks out all that play with retracement and all that. It's like you can see with the spread, and when you get those 3 candles, like, and it's stand out. Okay, it's time to go. Ain't no more guessing. Like, you know what I'm saying?
Exactly. And basically, you could simply open up your chart, right? And just look at it. Look at the trend. Look what you see. You understand? You can simply do it. Because, boom, I can simply open up my chart, right? With my experience and look at my EMAs and maybe 7 out of 10 times determine what's going to happen. You understand? Sometimes I can't always be right, but
I want to confirm so I make sure I got them right. The green is 9, and this is for everyone else because I think someone else asked for colors. So green is 9 EMA.
Yes, 30. EMA. The yellow is gonna be your WMA.
All right, cool.
And then the blue one is gonna be your 50 EMA.
Bet.
And then the purple one or the pinkish, whatever you want to put it, it's your 200 EMA. Solid. Your 200 EMA is the latest, it's the largest EMA. So it's going to further confirm the trend for you.
So you can
200, so if you're 200, go ahead. Sorry.
So basically it's like you seeing a future without zooming out while you're in it real time, because it's like if it's still moving in a downward trend, and it's selling, you're still good. But if it start coming up and the fingers, the spread start thinning out, then you already know that it's going to reverse.
It's a possibility of a trend reversal, and this is where you use your RSI. This is where you see your RSI. You know what I mean? To confirm that. So now, if when a reversal is gonna happen, it usually happens within the 20 mark of your ESI, the 20 level, 20 to 20 to 50, at least 20 to 15, because sometimes it happens. It goes down to 15, and then but it bounces. It's gonna. I guarantee you, every time price, from my experience, every time price hits 20 around the 20 mark. It usually bounces right off it, because now it's considered oversold in the market. So now it needs to retrace. It needs to, be fair to the market. So now it has to go back up. Sometimes it doesn't. Sometimes it starts playing there, and it'll whipsaw you right there in that area. You understand? Boom, 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 boom. So you want to confirm it. You want to see it rising with a nice sharp. I'm gonna show you. Hold on. Let me show my my thing again.
Can I just confirm one thing right quick, guys?
Go ahead.
I just want to reconfirm that I wrote these colors down correctly. I have the 9 as green. I have the 30 as yellow. I have the 50 as blue, and I have the 200 as purple. Is that correct?
Yes. I mean, you could put them whatever color is convenient for you. This is just the colors I use. You understand? Because I like to see it, and I put them at pixel 4. You understand? For I can see them better. I mean, like I said, whatever color is that you're comfortable with, you know what I mean? You could put in whatever color, as long as you know which color is what. But always remember that your 30 EMA is not a regular EMA. It's a WMA. That's the only thing different between all these EMAs. Your 30 is a WMA, not an EMA. And the rest is EMAs.
Got it.
You understand? And once again, the ones you want to really follow is in this with this. Remember the 50 and the 200s for further confirmation with this strategy, because it goes. If you look at it, it goes real entwined. It goes, and when I put these together and seen the power of it, I'm like, holy, excuse my French, shit. But basically, this is how, I further and I back tested it and and it's been working. And sometimes, it goes against it, but this is why it's important to learn the market, to stay plugged in. We can't always be right. The market sometimes does what it wants to do. I seen the most I ever seen a 1 minute candle go 1,000 pips. 1 minute. Straight down. So that's when the market crashed, when Uncle Biden crashed the market. If y'all don't know when that happened. But yeah. 100 pips, 1,000 pips, 1 minute candle. Straight down. But this is just to further confirm your trades, the trend. You understand? And this is gonna make you follow, stay alert of the trend. You understand? Don't panic. You understand? So, oh man, it's retracting. As long as your EMAs is spread out and that gap is still good and going your way, let it rock. Let it rock out. You understand? Let it rock out. Until you don't see your EMAs crossing each other again against you, let it ride the trend. Ride the wave. That's what when y'all hear me, oh, I'm riding this wave, that's what I mean. I'm riding the trend. I'm riding my 9. I'm riding my 9. Basically, that's why I have it green, because that's my money line. That's why I put it green. If y'all was wondering, that's my money line. You know what I mean? And I'm gonna ride my 9. I'm gonna ride my 9. Until I see the trend change, and my and my RSI confirms it, and you understand that basically this is how I use this strategy. And I hope what I showed y'all today can give you a better understanding, okay, of what to look for in the market when you're using this strategy, and when to confirm. You know what I mean? So a lot of people say, so what's your TP? My TPs is based on my 4-hour chart, because I already looked at it and seen the trend. You know what I mean? My TPs is on my 4, and then I break it down to my 5 minute for confirmation for entries. This is where I'm looking for entries. This is when I drop down to my 5 minute chart, and this is how I scalp as well. If y'all wondering how I've been scalping so good, now you see why. 5 minute chart, look, boom. We would have scalped it, right? I would have scalped that. Boom. 750 something pips. Risking 1%. And just following the strategy, trusting the strategy. You have to find, if you're gonna use this strategy, you need to trust it. Learn it. It's not hard. Trust me, it's not hard. It's an easy strategy to follow. Your 9 is above your 9 is above your 30, and it has a nice gap. You're on the uptrend. Your 30 is above it crosses and it stays above your 9. You're on a downtrend. It was depending on the gap. Just look for the gap in between it. The larger the gap, the stronger the trend will follow with this strategy.
I have a couple questions.
Yeah.
Can you hear me?
Yeah, I can hear you clear.
Yes. Yeah. Thank you for tonight. One is that Gigi's going to share this video. I noticed she had a PowerPoint or something. Are you going to be able to share that PowerPoint? And then secondly, the at the cross for the 30 and the 9.
Yeah.
You mentioned something about three candles before you
Yes,
do
this
the
is
market execution.
so me personally, I wait for the third candle. I'm gonna show you why. Okay, I'm gonna show you why I wait for the third candle. Right? What happens? Look right here. Okay, this is gonna be a perfect example. I'm gonna show you why I wait for it. Hold on. Give me 1 second. Let me get this. I'm gonna show you why I wait for the third candle. I want to show you where you get a nice sell-off. Okay, here we go. Let's see this nice sell-off right here, right? We're gonna look at this nice sell-off right here. Boom. Why I wait for the 3 candles? Here we go. Boom. Let me load that. Okay. Why I wait for 3 candles? Here goes the cross. Here goes the beginning of the cross. If you look at it, right? We was in a little uptrend, right? The 30, now your 30 is above, is above your 9 is above your 30, you know what I mean? So we was in a little uptrend, right here. Then you see how, if you look at it, here comes your 50. Your 50 start your blue, which will be your blue, crosses your 9 first. Then it crosses your 30, right? So here we go. 1, 2, 3. Look. You see how that goes? To further confirm it, do you see what I'm looking at now? Do you see why I say the third candle? So we have one bearish candle, the first red candle. Then you have a little doji. Then you got another one. But if you look at the gap, you see how your 9 stood below your 50 and your 30? That's basically the third. If the third candle is under your the third candle is under your 30 and closes under your 30, you're going to downtrend on the cross. This is why I look for the third candle. Huh?
Very little drawdown also.
Yes, and very little drawdown, exactly. So where would I put my stop loss on this? Let's just say I would have caught this cross, right? Where would I put my stop loss? I'm gonna show you where. I'm gonna show you exactly where I would have put my stop loss on this before trailing it. I'm gonna show you. My stop loss on this trade, if in this trade, would have been right here. Would have been right here. Right in this area. You see? Why? Now, I ask you, why you think I put it in that area? Can somebody answer that for me?
Last high.
Hi.
Price always returned to where it came from too.
Yeah.
That was the
So,
last high.
so basically, I'm looking at the thing. If you look at the chart, every time price hit there, it bounced. It bounced. It bounced off. It bounced off. It sold off. It got there again. It's got there. It lingered there. Boom! It bounced again. Now we got a strong bullish. So that would have been only. I'm gonna measure it for you, right? That would have only been how many pips? I'm gonna show you how many pips it would have been. If where is it? Oh damn. Okay. Okay. Here we go. Let me show you. That would have been, let me show you. This would have been the stop loss. Hold on. I'm going to show you. Hold on. Entry. Hold on. I'm going to show you. Hold on. Give me 1 second. Okay. Entry. I'm sorry about that. That's too much. I'm bugging. This is bugging. Okay. Okay. Boom. Hold on. Let me move the whole thing. My stop loss would have been right above that high. You understand? My stop loss. And this is look at it. My entry would have been right there, right? Hold on, let me hide the other indicators.
What tool is that you're using to measure?
You have to go into your drawings, and you're gonna look for, this is on Trading View, and you're gonna go all the way down where it says prediction and measurements, and you're gonna see long position, you're gonna see short position. Long positions for a buy, short positions for a sell.
Oh,
Right?
excellent.
So now, right, your entry would have been at the cross. My stop loss would have been only at, let me see, hold on. Right? It would have been a little bit above my high, right? I don't want it too high, right? A little bit low. So we're talking about, in the indices, about 20 pips right here, 20, 30 pips, right? About 20, 30 pips, 20, this, all right? 20, 30 pips, average. And then look at this, look at the fall. 2, if you know how, if you know, see, right there, nice sell off. That's 1,130 pips. Okay, risking only 23 pips. Stop loss. Did you see the power of it now?
Yes, for sure.
Outstanding.
You understand? Do you see the
Wow.
power of it? And why? Once again, why? As I put it there, all right? And now, where was my TP? Once again, was my TPs. I started looking at, I just stayed paying attention to, I pay attention to what market's doing. You understand? I pay attention to my EMAs. I pay attention to the spread, the gap into them, in between them. And once it was when do you want to get out? Well, here we go. I'll show you an example. You could probably, a lot of people would have probably got out here. Look, check it out. A lot of people would have probably got out here. That's cool. You would have ate nice with that, you know?
Yeah.
1,000 something pips, right? You would have end nice. Me personally, I would have waited. I would have stood, I would just trail my stop loss. I just continue trailing my stop loss. Because to me, it's still on a down. I mean, it came up, you know, but it's sideways. You see how all the EMAs are all together? I don't like to, you know what I mean? It's cool. It's still respecting it. Look, it went up above a little bit, a little whipsaws. Then retest a little bit more, but we still in profit. Where the hell? We still in profit. Boom, where the hell? Look, still in profit. It still haven't go to where we we started at. You understand? Still in profit. It tested, boom, and it kept going down. And once again, your EMA is gonna tell you what the market's gonna do for you with this strategy. You could have got another entry, right? You could have got another, you know what I mean? This is different. You could use this as different entries on the cross. The main ones you want to really look at is your 9 and 30. Those are the strongest ones that you want to pay attention to with this strategy, because it is the 9 and 30 strategy. The only thing I add to it was 50 and the 500 and the 200 for further confirmation. That's it.
Papote.
Yes.
Thank you. You are entering on the 5-minute chart, and you keep it on the 5-minute chart for the whole trade?
No, I start with my 4-hour chart to see what price is doing, see what trend I'm into. So they just say, let's get out of the 5-minute, right? Let's start at the 4-hour, right? Real quick. Let's start at the 4-hour. This is my daughter woke back up, right? Start at the 4-hour.
Okay, can I ask you a question? How do you put on TradingView? What do you go to pull up where it has the squares where you can just click on there?
What you mean the squares?
You know how you just went to your time frames?
Oh, Oh, it's right there on the side. It's right on the side. You just click on wherever in the bottom. If you look at it, if you have your chart, you're just gonna click on the pair, and where it says 4 hours, and it should open that up for you.
Oh, at the bottom.
Yes.
Oh,
If
instead of
you
at the top,
sideways, it's
that's
at the
you.
bottom. If you got your device straight out, it will be on the top. But if you have it sideways like I do, it will be in the bottom. So basically, you could just stroll. If you put favorites, you could just stroll. You see?
Oh, I see you strolling at the bottom. I see
Yeah.
it.
See? You could just stroll. Makes
Okay.
it more easier for me. You know what I mean?
I like
When
that.
trading. So now, here goes. 4-hour chart. Right? What do you see happen here? Check it out. I'll show you how powerful this is. What do you see happen here in the 4-hour chart? What happened there? What happened here? You understand? This is how we looking for this is how we trying to see where the trend is going. You see the curve in your 9, and you see it close your that candle closed under your 30. So now you know it's about to go. It's a nice downtrend for right now, because that's a 4-hour candle. So it's gonna take 4 hours for that to reverse. You see the power of the 4-hour chart? If that candle is gonna take 4 hours if it decides to reverse, to reverse completely. And
Okay, wait a
then
minute. So did I understand, because I missed it? It actually closed on top of the 50, correct? Because your 50.
yeah, so your
30.
50 is your
30, I'm
maximum.
sorry.
Yes, no, it actually closed below my 30. If you open up, you see it. You see
Yeah.
you see, and then you see the curve in it. It
Yes.
actually closed below my 30.
Okay.
So I know, and it bounced off my 50. So I know it's gonna take 4 hours for that candle to reverse completely, if it does reverse.
Oh, so that means you're gonna be in that cell for 4 hours.
No, this is how I'm looking. This is how I'm trying to see what trend we in. You understand where the market's at? Understand? So this is why we use the larger time frames. That's my point of interest. You understand? I start with my 4 hour because now I'm looking for my point of interest. You understand what the market's doing? And if we keep looking at it, it's still, you know what I mean? It's testing the 50. It's gonna bounce off the 50. You know what I'm saying? But now we break it down. We get out of here and we get out this 4-hour chart, right? And we break it down to the hour chart. So now we know our point of interest, right? Oh, that's the daily. The hour. Now you know your point of interest, right? So let's open this up. Let's open this up. What do you see in the trend? What do you see there?
I see
That's
the
the
big
4
red
hours.
tape.
You see what you see now what I'm saying? You see now. Your 30 is above your 30 is above your 9, and your 9 is about to cross your 50. It did the cross right here. Check it out. Did the cross right here, right there, right? This is your. So if you was leery about it because it was still, in between that, you could have got an entry right here, right there. So 4-hour point of interest. You understand? To see where the market's at. That's what you want. See what trend we in. You know what I mean? To see what was that candle. What was the last candle that happened? Okay. Then you break down to your 1 hour. Then you could break down to your 15 minutes. And it's still confirming. Look. So like I said, whatever happens in the 4 hour, it's gonna happen in the 5 minute. Don't get stuck with the time frames, because it's gonna get very confusing. Yes, we use larger time frames for our point of interest. Well, me personally, I'm not gonna say we, because a lot of people don't trade like me, but I look for my point of interest in the 4 hour. to see how to see what can do. You know what I mean? Because once again, it's gonna take 4 hours for that trend, that candle to reverse.
So it's almost like looking down at something on the first floor. You don't see as much until you go up to the fourth floor. You get a wider picture. That way you can see the full,
Exactly. So
you
now
know, you see
break
a wider
down.
picture, bigger picture, so to speak.
Yeah. So now you break it down now. You break it down, boom, 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 for you could see your entry, where you want to enter for your entry. And that's when you want to break down to your 50. You could do it with your 15, because look, even in the 15, you see it. You understand? Even in your 15, you see it. Right here, look, even on the 15, look at it, look at it, look at the trend, look at the EMAs. Once again, your 50's on top of your 30, your 30's on top of your 9, and your in the 200 just crossed it as well. And I'm zoomed in, but that's like I said, that's that many pips. And still in your favor. Look. And still in your favor. Because look, price is still. See where price is at? See the gap? So it's still respecting it. So 4 hour, confirm it was a bearish trend. I mean, a bearish market. You look for your point of interest. And you break it down. And you can go to your 5 minute. Go to 5 minute. Same thing. Look, even a bigger picture for you. So you want to confirm it with the longer time frame, for you can know when you go to your lower time frame and you see this, you know you can ride out. That's what the big longer time frame is for. Point of interest, and you use the lower time frame for your entries. Point of interest just to see if we're in a bearish market or we're in a bullish market. And further confirm, you know what I mean? And follow the EMAs and the gap. That's basically how you use the strategy. I'm gonna leave it at that for right now. Hopefully y'all got what I do have what you may call it, a PDF, but I will not share it because I don't want it to get into the wrong hands. This call was recorded and it will be replay. There will be a replay on it. Y'all can personally hit me up if y'all need any further understanding, but please don't blow my phone up. That's all I ask. All right. I don't mind sharing.
It's me. You don't want those problems. Mine is 24 hours a day, 7 days a week. Y'all don't bother this man. He's got a new baby.
Yeah,
it should be recorded, right? And it recorded,
it's recording. It's recording, and
okay,
like I said,
everybody can just go watch the replay.
I'm not gonna share the PDF because I don't want it to get in the wrong hands. I'm not saying nobody's gonna send it to somebody, but I just don't. I just don't. I don't want to.
Trust me, they will. It's happened to me a million times the last 3 years.
You gave us enough right there.
Yeah, I'm not sending out the PDF. I think I explained this to a T, and how to use it from your 4 hour all the way to your 5 minute, even the 1 minute. You want to see the 1 minute? Check this out. Check this out. So we know we're in a bearish market, right? Right? Look, 1 minute. What do you see? Where's your 200? On the 1 minute. Look at the 200. Look how
all the way at
far.
the top.
Exactly. So like I said, whatever happens in the 4 hours is going to happen in 1 minute. It's going to happen. The only thing, the lower time frames is for your entry points. That's it. Usually don't trade off the lower time frame, like decide. Make sure you confirm it from your higher time frames and break yourself down. Don't just go to the 5 minutes and say, okay, this is going to happen, because listen, the market can have anything happen in 5 minutes. This is why you want to go to your 4 hour. Once again, I'm gonna show you. All right. You want to go to your 4 hour, right? And your last candle was bearish. Look. Your last candle was bearish. So once again, it's gonna take 4 hours for that candle to reverse. And look at the loop. Look at the loop, right? You see the little loop, and it's under your 30. It's under your 30. So now it's on its way to into your 50. And that's all I have for y'all tonight.
That's some good game. That's some good game, Mr. Banks. I like to thank you.
Oh man, that was a lot. Even though it wasn't that, it was all that.
Thank you, Papote. Now we can follow along with you.
Thank you.
Thank you.
So now y'all know why
The legend.
I do my trades. So
Thank
now
you.
y'all when I see
Thank
we
you
put
very
out
much.
Thank
You
you.
know why? Now y'all know why. Okay, Papote's off the down
you.
one. See what Papote see. You understand?
Right.
And I, like I said, I do mark up my charts as well. I just don't go off my EMAs. You understand? Like I did earlier. But I usually mark up my charts on my phone. I learned how to do it quick. You understand? But this is how I've been using this. This is what's been working for me. You know, and hopefully y'all can get this down pat.
Right there.
That's all you gotta look for. 4 hour, see where the freaking last candle's at, see if it's bearish, and then follow right along. Break it down to the 1 hour.
That's something.
That's
One
break it down
question.
to 1
Is your
hour.
RSI default?
Yes, it's in default. The only thing I added was the 80 level, the 20 level, and the 50 level. The 50 level, I consider it the pullback reversal area. The 80 level, I consider it overbought. So I would say I'm going for a sell. And the 20 area, I consider it as oversold. And price usually, every time it hits those areas, it reacts. So you want to look at the reaction. You know what I mean? You want to look at your EMAs as well. You know what I mean? See if it's going in twine. If they both going in twine with your EMAs, it's just respecting it.
Okay, thank you.
You're welcome.
I definitely
All right,
appreciate
guys, so I would like to thank Mr. Papote for coming on with us tonight. Go ahead.
With Mr. Papote, where did you say the 80 goes?
The 80, no, the 80, listen, no, there's no 80. That's your RSI. This is the levels you want. All right. Not the, we don't have an 80 EMA. This is your RSI. This is a secondary indicator that I use to further confirm, for further confirmation, basically. So you want your 80, you want to label it as buy, as sell. You want to label your 50 level as of a pullback reversal area. Price likes to play. That's the magnet. That's the magnet I speak about. The magnet. Price likes to play in that area sometimes. All right. So if your RSI is above, crossing the 50 and remains above your 50, you know you're in an uptrend, right? Until you hit the 80 point. When you hit the 80 point, it usually reacts off the 80 and it usually sells off again, because now it's considered overbought. And vice versa. The 20, same thing. It hits the 20. That's where you want to put the buy. You understand? You want to look at it. Don't just jump into it. See the reaction off the 20 and see if it continues rising cross your 50. Once you see it crosses your 50 and it comes, it's you know what I mean? It's a nice sharp, it's not shaky, it's not whipsaws. You know what I mean? It's nice sharp going upwards. You know you're going on an uptrend. It's gonna buy. That's how you use it. It's simple. I think this is one of the simplest strategies that you can really follow and get good entries and good trades off. Not because I use it, but it's been working.
Thank you.
So again, I want to say thanks to Papote. Guys, for those of you who've been like on the ChartNChills and ForexNChills the last 2 years, y'all know I like to bring people that do different things because everybody sees the market different. See, what I do may work for some people best, but what Papote does may work for other people best. And that's why you have to find what works for you and stick to it. And the keywords that he told you guys tonight, he is not indicator trading. He has already marked up his charts. He's already looked at market structure and he has anticipation of what the market is doing. These indicators are his confirmation or his confluence. It's like the church saying amen. Okay. He's already looked at his chart. And now this is just the church saying amen. This is the amen corner going right here. And he's made a lot of money doing this. So back test it. Never just jump on something because you're going to have to train your eyes to see what he's seeing.
Yeah, you have to understand what you're seeing. So that's why I always say learn market structure, learn basically your price action. You know, I'm big on price action. You understand? And trust me, if you pay attention to the market and you pay attention to, you know what I mean? You're gonna see that the market's gonna tell you the story, man. It's gonna tell you his story. This is where a lot of people fail at, is that they start guessing. Or I send out a trade, or Gigi sends out a trade. The trade already hit TP1, probably TP2, and y'all want to jump. You want to jump into the market that late because everybody's saying, "Oh shit, hit TP2, shit." Don't do that to yourself. If you didn't catch the move when the signal was sent out, I advise you, if it already hit TP1, stay out the trade. Because the market can easily reverse on you. Or wait for a pullback. You understand? Wait for a pullback around the entry area. And that's the last thing I have for y'all guys. It was great. I feel good that I did this. You know, I was very nervous, you know. I appreciate y'all. And we're going to go from here, man.
2 hours of nuggets with the dipping sauce on the side.
Yeah, with different little sauce on the side, you know. I appreciate
it. You just get nuggets, but you got the sauce to dip it in. All right, guys. Y'all be blessed. Thank you so much, Papote. We truly appreciate you sharing your knowledge.
I see you on the top because the bottom is too crowded for me.
There you go.
All right, plenty of room at the top. Let's go. Let's grow. Have a good night, everybody.
Good night.
Good night.
Night.